You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, August 29th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from MarketWatch.com. Gas prices are set to drop as summer driving season ends. With the summer driving season drawing to a close with the Labor Day weekend, motorist group AAA forecasts a sizable drop in prices for gasoline at the pump. The national gasoline price is likely to average $2.70 this fall, down from current prices of $2.84 a gallon, and more than a quarter cheaper than this year's high of $2.97, set in May, AAA said Wednesday. Consumers will see savings at the pump when they fill up this fall, given cheaper to produce gasoline, relatively stable crude oil prices in August as well, and an anticipated drop in consumer gasoline demand after Labor Day, said Gene Castellano, a AAA spokesperson. Our second story today is from Investing.com. Undervalued coffee and sugar may be poised for a sharp snapback. Do you drink coffee by the pot and like it sweet? Even if you do, that's unlikely to lift the Arabica market from its current doldrums or send a lifeline to sugar, which is also at multi-year price lows despite the planet's 8 billion people consuming the sweetener. Yet market bears who are insistent upon suppressing the two staples may be in for a shock, as a sharp price snapback may be in store, analysts warn. The market for any commodity is based on supply and demand, with the exception of extreme U.S. shale crude oversupply events such as what occurred in 2016 and global financial crises like the 2008-2009 crash. The price of oil, the commodity which powers and moves the world, has been largely dictated by fundamentals and occasionally technicals. But Arabica coffee and sugar might be getting hammered beyond both of those metrics now. It's highly possible negative sentiment is now driving declines. Getting too bearish at the current lows in the sugar and coffee futures markets could turn out to be a very costly mistake for traders and investors, veteran commodity markets participant and analyst Andrew Heck cautioned in a blog on Tuesday. Our third story today is from Investing.com. U.S. second quarter GDP growth revised up to 4.2%. The U.S. economy grew at a slightly faster pace than originally estimated in the second quarter, according to data released Wednesday, with the rate of growth the fastest since late 2014. Gross domestic product expanded at a 4.2% annual rate in the 3 months to June, instead of the previously reported 4.1% pace, the Commerce Department said in its first GDP revision. That was nearly double the 2.2% expansion registered in the first quarter and was the fastest rate of growth since the third quarter of 2014. Analysts had been expecting a decline to 4%. Compared to the same quarter a year earlier, the economy grew 2.9%, up from the previously reported 2.8%. Exports were revised down to 9.1% from 9.3%, while imports were revised to show a drop of 0.4% from an increase of 0.5% in the initial estimate. The upbeat data underlined expectations for the Federal Reserve to stick to plans for further gradual rate hikes. And that, ladies and gentlemen, is news you can use for today, Wednesday, August 29th, 2018, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.